Hi friends, today we are going to discuss how we can solve a cash flow problem. Are you ready? Shall we start? Okay. First, we have to analyze this company's balance sheet. One company's balance sheet we have to analyze. Two years informations are here, 2018 and 2019. So first item is the share capital. Share capital 5 lakh and next column it is the 7 lakh. So we can simply say that we issued some shares, okay, equity shares, but note number is here. We have to go to the note number first. Okay. So share capital, equity share capital 3 lakh and preference share capital 6 lakh. What happened here? We are issued 3 lakh rupees equity share capital. So that is the inflow of cash under financing activity. Next one, 12% preference capital. That means this 12% is the name of the preference share capital, or that is a dividend rate. So 2 lakh was here, here it is a 1 lakh. That means we redeemed 1 lakh. When redeemed, now we don't know. We hope we will get the information from our additional information. So this is the outflow under financing activity. Okay. So next one is the reserve and surplus. 3,25,000 and 2,50,000. Note number is there, so we have to go to the note number. General reserve. General reserve with 3,75,000 was here. Now to 1,50,000. So 2,25,000 rupees we took from the general reserve for some purpose. Actually, if we are transferring amount to the general reserve, we used to add back. Here what to do? We have to deduct that amount from our surplus. This amount we have to deduct from our surplus to calculate net profit before working capital changes. Next one, it is the surplus in the balance sheet or profit and loss. So here it is a minus value, here it is a plus value. That means so this loss we adjusted in the current year profit. The afterwards we got this 1 lakh rupees. So our actual profit of this year is the 1,50,000. Otherwise, the closing balance minus opening balance. So we will get 1,50,000. So this amount is our surplus. Surplus for calculating the net profit before tax and extraordinary item. Next, what here is share capital reserve over long-term borrowings. In our balance sheet, long-term borrowings. So how much is the long-term borrowings? 2,50,000 and 2 lakh. But note number is there. So we are going to the note number 3. That is a 9% debenture. This 9% is the interest rate. We have to calculate 9% interest, and this 9% interest we paid dividend. So dividend, no interest. So we have to add back along with the profit under the non-operating expenses. It is the financing activity. It should show us the financing activity. How much is the 9% debenture interest that we have to show us the financing activity outflow of cash. That is the one treatment. Another one is the 2,50,000, 2 lakh. So we redeemed this one also. We repaid that amount of 50,000. When we don't know now, we hope we will get that information also from the additional information. So this is the outflow of cash under financing activity. So next one it is, which one is the short term provision. Short term provision 25,000. Short term provision 25,000 and 50,000. If no information, in additional information, we can take this 25,000 as a tax paid and this 50,000 as the provision. Provision add back along with the surplus to calculate profit before extraordinary item, and this one we have to a tax paid in the cash from operation for calculating the cash from operation. If any additional information is there, accordingly we have to do. So next one it is the short term provision. What is a short term provision? No, this number is there. Here provision for tax. So that's why I explained that one. If 25,000 is, we can treat as a tax paid. It is we can treat as a provision for tax if any additional information is not available. Okay. Next one, it is the assets. Asset, mainly assets are coming under which activity? Long term assets are coming under the investing activity. Here two items are there. One is the machinery tangible asset and another one is a non-current investment. No note number here, so we have to wait for additional information. If no additional information, you can take this as a purchase. Okay, in outflow of cash under the investing activity. If any information is there, do accordingly. So next one is the inventory current asset. Here we are using for calculating that is working capital changes. How much is the working capital changes? Inventories and trade receivable. Cash and cash equivalents 1,70,000 and 3,10,000. Opening balance 3,10,000 and closing balance is 1,70,000. Keep in mind this one. That is our answer. Trade receivable. What's happening here? 1,80,000, 1,50,000 increased to 1,80,000. That we have to deduct from our profit. That is for calculating working capital changes. And then here it is the decreasing. That is we can add along with the profit to calculate the after working capital changes. I think this is the question evaluation. Next we have to go to the additional information. Here machinery costing rupees 1 lakh, depreciation charge 70,000 was sold for rupees at a profit of 20%. So we have to calculate that one. 1 lakh cost, we charge depreciation 70,000, balance amount is equal to 30,000. We are getting that is a 20%. We are getting 20% profit increase. That means we are getting 6,000 rupees extra. So sales value is 36,000. Okay, sales value is 36,000. This amount is the inflow of cash under the which activity? Investing activity. Okay, this is the inflow of the investing activity. This 6,000 rupees is a gain. That gain we have to add back along with the profit. That is the non-operating income. Non-operating income we have to add back. This many informations are here, and you can check how much was the that machinery value. Machinery value is increasing 3 lakh and 5 lakh. It is increasing, but they are saying that is the sales happens there. So what to do? We have to prepare one account, and we need the correct information. So we have to prepare the accounts of machinery. That's a fixed asset account we have to prepare. Clear, we can prepare that one. Next one, preference shares were redeemed at the par on 31st March 2019. This preference shares 1 lakh rupees redeemed. So that happens on the day 31st March 2019. Clear now. Debentures are redeemed on 1st January 2019. That debentures also redeemed 50,000. That when happen? That happens on the 1st January 2019. And the equity shares were issued on 1st April. 1st April means that is the starting date of the year accounting period. Here it is the 1st January 2019. Okay, we are okay. So the company declared and paid the interim dividend on equity shares 8%. Okay. Company declared the interim dividend of 8%. If company is declaring dividend to the equity shares, means preference shares also has to get the amount. So how much is the equity shares issued? Total amount. How much is the total amount? That outstanding balance is 6 lakh rupees. So we have to calculate that 6 lakh rupees into how much is the 8%? 8 by 100. That amount we have to calculate that dividend paid to the whom? Equity shareholders. Which activity is this? This is the outflow of which activity? Financing activity. Okay, we paid this dividend, so already we deducted from our profit, so add back there as a non-operating income. sorry, non-operating expenses. So then here debentures are redeemed. Debentures are redeemed on 1st January 2019. So we have to give the interest to them. How we can calculate? First 2,50,000 rupees. How many months remaining when they are redeemed on January 1st? April, May, June, July, August, September, October, November, December. 9 months. 9 months by 12 into 9 by 100. Okay, this amount we are redeeming. How much you will get? That you will get, that is 16,875. Okay, then balance 2 lakh rupees. How many months remaining? That is a 3 by 12. 3 months only remaining, January, February, March. So 9 by 100. I think that is a 4,500 rupees. Okay. Total how much is getting here? Total is getting here 21,375. This amount is the interest, debenture interest, outflow of cash. Under which activity? Financing activity, and the same time this is a non-operating expense. Add back. Here we missed one thing here. We have to give preference dividend also. Why? Because preference shareholders having the preferential right to get the dividend before equity shareholders. Here we are giving to the equity shares, so we have to give to them also. How much is outstanding amount? Outstanding amount is 2 lakh rupees. That 2 lakh rupees into how much is their name itself, they are telling 12%. So 12 by 100. This amount also financing activity outflow, and the same way non-operating expenses. So we have to add back along with the profit to calculate the net profit before working capital changes. Next one, it is a company. The non-current investment costing rupees 60,000 was sold at the rate of profit. So 60,000 sold 12%, sorry, 20% profit. That means 12,000 we are getting extra. Total amount we are getting how much? 72,000. This 72,000 is the inflow of cash. Inflow of cash under investing activity. Under investing activity, inflow of cash, and then this gain. Gain already we received, that is a non-operating gain or non-operating income. So this we have to deduct from there. So, but here one question is there, like our fixed asset, non-current investment. Non-current investment is the 1,40,000. Here 1,40,000 was increased to 2 lakh, but they are saying 60,000 rupees they sold. So again we have to draw that non-current investment account also we have to draw. Okay, then income tax. Oh, this income tax treatment also here we discussed this provision, two provisions only. We can do like this, like that, but it's not possible. We have to draw the provision account also. So shall we move to that area? So here provision for tax account balance, it is a creditor, so credit balance 25,000. Here it is a closing balance 50,000, and this year as per our question adjustment, this year they are providing 45,000 tax provision. So that we are writing that balancing amount we are getting, this is a tax paid. What to do here? This tax paid we are deducting, that is cash flow statement, tax paid, where is the tax paid is coming from there, and this one we are adding back to calculate the original surplus. So next one is a machinery account we are preparing. Machinery account debit balance, opening balance, closing balance. So here how much the machinery sold, that's coming here, and that is a depreciation charge, how much we are writing that there, and gain we are writing here, and then what is the balancing figure, it is sales. This, sorry, what to do? This purchase amount is the outflow under which activity? Outflow under investing activity. Okay, Next, come to the non-current investment. Non-current investment also assets. So having the debit balance, okay, and the closing balance is the credit balance here. And the sales we calculated 72,000. That gain we are writing here 12,000. And balancing figure it is a 1,20,000. This 1,20,000 non-current asset they purchased this year. This is also, which one is there? It is also outflow of cash. Under which activity? Investing activity. Then one more thing is there for working note. We have to find out the tax before extraordinary item. Calculation of net profit before tax and extraordinary item. Our profit as per our book this year, and we are adding the loss last year deducted, added back. We are getting 1,50,000 rupees. How much reserve we took? That reserve we are deducting from here 2,25,000. We are getting this year loss 75,000. We are transferred provision for tax 25,000, 45,000 this year provision, and dividend for 24,000. That is a 12% of 2 lakh. That is a 24,000, and dividend indirium 6 lakh rupees, 8%, 48,000. This we are adding. We are getting the profit before tax and extraordinary item 42,000. We are taking this amount to the cash flow statement. So here we are starting with that amount 42,000, and next one, depreciation of machinery. We are find out 70,000 that you are getting from our question. And next one is the gain we are calculated from machinery account 60,000, and their interest on debentures we calculated 21,735. Sorry, 375. And next interest on debentures, that one, and gain on the current investment, non-current investment gain, and that we are deducting that one. We are getting that is operating profit before working capital changes this much amount. From there, decrease in the current asset 50,000 and increase in the current asset 30,000 adjusting, that is 1 minus 1 plus. Then afterwards we are getting the cash from the operating activities. Then we are making payment of tax. We are calculated provision for tax account. That balance we are getting 20,000 here. That amount we are deducting. Here you are getting cash flow from operating activities. Next stage is the cash flow from the investing activities. So first we purchased machinery. We prepared the machinery account. We purchased that amount. We are writing that is the outflow. Here we purchased that non-current investment, that outflow we are writing in bracket, that minus value. And sale of machinery, that amount also we are available in our question 36,000, and this one including the gain. Okay, and here non-current investment, that also including gain we discussed earlier. We are writing that one, and that total we are getting here. This is the cash flow from investing activity. Okay, this is cash flow from the operating activity. This is from the investing activity. Next we are going to the financing activity, that we are issued shares 3 lakh rupees. Then there we are redemption, that is minus 1 lakh, and again our debenture redemption, that is 50,000 rupees. And then we are paid preference dividend, we are paid the equity dividend, we are paid the interest. This all those things we are writing the total here, and then we are getting that is this amount, which is a cash flow. That is this is the amount we are getting, that is the cash flow from the financing activity. Then we are adding which are the amount of this. So this amount we are getting 1,15,375 plus minus 3,12,000 again plus minus here there plus only 56,625. That time you are getting balance amount is a 1,40,000. That is a minus value. Okay, that minus value you are getting, that is a net increase in cash and cash equivalent. Then we are adding the opening cash and cash equivalents. So last question we discussed, that is the 3 lakh 10,000 rupees, and then we are getting the closing cash and cash equivalents. Our answer is correct because we received that is 1,70,000 as our closing cash in cash equivalent as per the question. Just to check is it correct or not, your closing cash and cash equivalents is 1,70,000 or not. Check here, cash and cash equivalents. Okay, opening cash and cash equivalents is the 1,10,000 and closing cash and cash equivalents is the 1,70,000. If you are doing the problem correctly, we will get the answer from here itself. I think you all understood this problem well, practice well and score nice marks. Thank you and have a nice day.